So, an IRS audit just uncovered what investigators are calling a web of hidden offshore accounts tied to Donald Trump that weren't disclosed on his tax returns or financial statements. We're talking about accounts in the Cayman Islands, Switzerland, and the British Virgin Islands holding what sources estimate could be hundreds of millions of dollars. It's honestly hard to believe that someone who spent years claiming he couldn't release his tax returns because they were under audit was actually hiding this kind of financial structure the entire time. Donald Trump has spent decades positioning himself as the ultimate American businessman, the guy who built his fortune in New York real estate and made his money right here in the United States, whether it was Trump Tower, Mar-a-Lago, or his golf courses. Trump's brand has always been wrapped in the American flag. He's portrayed himself as a patriot who loves this country and would never do anything to avoid paying his fair share. That's been his shield against critics who questioned his finances. But guess what? The IRS just dropped a report showing a sophisticated network of offshore accounts that Trump never disclosed to Congress, never mentioned in financial statements provided to banks, and apparently worked very hard to keep hidden from regulators and the American public. This isn't just about one account or one questionable transaction. We're talking about a systematic offshore structure designed to hide money and avoid scrutiny. This isn't just about Trump's personal tax bill. We're talking about whether someone can run for president, serve as president, and potentially run again while hiding vast sums of money offshore. Money that raises questions about financial conflicts of interest, foreign entanglements, and basic honesty with the American people. We're talking about Congress's ability to conduct oversight and whether elected officials can simply conceal their finances from the very government they're supposed to serve. Let me fill you in on what's been happening and why this discovery represents such a devastating blow to Trump's remaining credibility on financial matters. So, Donald Trump, 45th President of the United States and current Republican frontrunner for 2024, he left office in January 2021 after refusing to concede his election loss, but he's been fighting multiple legal battles and positioning himself for another run. Throughout his political career, Trump has faced persistent questions about his finances. He broke with decades of tradition by refusing to release his tax returns during his 2016 campaign, during his entire presidency, and even after leaving office. His excuse was always the same. They were under audit, and his lawyers advised against releasing them. According to reports from the New York Times dating back to 2022, when Congress finally obtained Trump's tax returns through legal process, initial analysis showed some questionable deductions and raised eyebrows about his reported income versus his known spending patterns. But the returns that Congress received, while revealing, apparently didn't tell the whole story. From the beginning, tax experts noted that Trump's returns seemed to show unusually low income for someone maintaining his lifestyle, and there were transactions that suggested money might be moving through structures not fully disclosed in the returns themselves. Whether it was claiming massive losses that offset income for years, taking questionable deductions for conservation easements, or reporting business expenses that looked suspiciously like personal spending, Trump had always pushed the boundaries of tax law. He cemented himself as someone who viewed tax obligations as a game to be won through aggressive accounting, rather than a civic duty to be fulfilled honestly. His approach to taxes has always been to pay as little as legally possible, and maybe even less than that if he thought he could get away with it. But here's where things get interesting. We're now learning that the IRS, as part of a mandatory audit of presidential tax returns that was supposed to happen during Trump's presidency but mysteriously didn't, finally conducted a comprehensive review. And what they found in their November 2024 report, according to Politico's exclusive reporting on November 19th, was absolutely staggering. The audit uncovered references to foreign bank accounts and offshore entities that weren't properly disclosed on Trump's foreign bank account reports, the FBAR forms that all Americans with foreign accounts are legally required to file. Bank transfer records are showing money flowing to the Cayman Islands. Corporate structures in the British Virgin Islands appear designed specifically to obscure ownership and hide assets. Swiss bank accounts were receiving deposits that don't match up with income reported on Trump's U.S. tax returns. This mess is unfolding because IRS investigators finally, freed from political pressure after Trump left office, did the kind of thorough audit that should have happened while he was president but didn't due to what whistleblowers have described as interference from Trump-appointed Treasury officials. And guess who's stuck right in the middle? Yep, Donald Trump himself, along with what investigators believe are family members and close business associates who helped set up and manage these offshore structures. They're all potentially liable for failing to disclose foreign accounts, which is a serious federal crime that has sent other wealthy Americans to prison. He's supposed to be the America First president who keeps his money here at home and pays his taxes like everyone else. But here's the kicker. The evidence suggests he's been doing exactly what he's accused wealthy elites and globalists of doing, hiding money offshore to avoid taxes and scrutiny. He's been using the same kind of tax havens and shell company structures that he's railed against on the campaign trail. And before we go any further, let's be real for a second. Having foreign bank accounts isn't automatically illegal. Plenty of Americans have legitimate reasons for foreign accounts related to international business or family connections. But you have to disclose them. You have to report them on your tax returns and file the required FBAR forms. The crime isn't having the accounts. It's hiding them from the IRS and failing to pay taxes on income those accounts generate. Now, back to the matter at hand. Reports from around November 18th revealed just how extensive this offshore network appears to be when congressional investigators got their hands on the IRS audit report. According to sources who spoke with CBS News, the House Ways and Means Committee received a classified briefing from IRS investigators that laid out a structure involving at least 15 different offshore entities across 3 countries, with evidence suggesting the network was deliberately designed to hide assets and avoid both taxes and financial disclosure requirements. The committee's ranking member, who attended the briefing, emerged and made a public statement that really raised eyebrows. He said the offshore structure revealed in the audit was among the most sophisticated attempts to hide assets from the IRS that investigators have encountered in recent years, and that the evidence suggests a deliberate, sustained effort to avoid both tax obligations and public disclosure over at least 2 decades. Talk about strong words from a congressional committee that has seen its share of tax avoidance schemes. Essentially, congressional investigators were saying that this wasn't just aggressive tax planning or using legal loopholes. This was potentially criminal tax evasion through concealment of foreign accounts and unreported income. The systematic nature of it, the multiple jurisdictions involved, and the apparent care taken to hide the accounts all suggest intentional wrongdoing rather than inadvertent mistakes. And this wasn't revealed in some obscure filing or leaked document. This came from an official IRS audit report provided to Congress as part of their constitutional oversight responsibilities. A federal agency tasked with enforcing tax laws conducted a formal investigation and concluded that serious violations occurred. This announcement sent shockwaves through Washington and Trump's political operation because it raised all sorts of questions about what else might be hidden, who knew about these accounts, and whether foreign governments might have known about them and potentially used that knowledge as leverage. Here's where it gets really interesting. If the IRS, which has been historically reluctant to aggressively pursue politically connected individuals, has documented these hidden accounts and referred the matter to Congress, what does that say about the strength of the evidence? What does it mean for Trump's financial credibility and his political viability going forward? Now, this isn't the first time we've seen Trump caught hiding financial information that he was legally obligated to disclose. Trump's entire approach to financial transparency has always been obstruction, concealment, and attacking anyone who tries to see his actual finances. Whenever someone seeks information about his real financial condition, his actual income, or his business dealings, he's quick to claim it's nobody's business, file lawsuits to block disclosure, and attack the motives of anyone asking questions. We've spotted this pattern time and time again throughout his business career, his presidency, and his post-presidential period. Just think about how he handled congressional subpoenas for his tax returns and financial records while he was president. When the House Oversight Committee subpoenaed his accounting firm, Mazars USA, for financial records in 2019, Trump didn't just decline to provide to them. He sued to block the subpoena, arguing that Congress had no legitimate legislative purpose for seeking the records. His lawyers fought the case all the way to the Supreme Court, arguing that sitting presidents were immune from congressional oversight regarding their private finances. He spent 2 years and millions in legal fees fighting to keep Congress from seeing records that every other modern president had willingly disclosed. When the Supreme Court finally ruled against him in 2020, Trump's team continued to fight through procedural objections and delays, ensuring that Congress didn't actually receive the full records until after he left office. Then there was his response to New York prosecutors seeking his tax returns as part of their criminal investigation. When Manhattan District Attorney Cyrus Vance subpoenaed Trump's returns from Mazars, Trump's lawyers argued that a sitting president couldn't be subject to any criminal investigation, even at the state level. They claimed absolute immunity from all legal process while in office. The case went to the Supreme Court twice. Even after losing both times, Trump's team continued fighting through additional procedural maneuvers. The message was always clear. Trump would use every available legal tactic, no matter how far-fetched, to prevent anyone from seeing his actual tax returns and financial records. And let's not forget how he handled financial disclosure requirements during his presidency. Presidential candidates and sitting presidents are required to file financial disclosure forms that provide basic information about income sources, assets, and potential conflicts of interest. Trump filed these forms, but they were notoriously vague and incomplete. He claimed broad exemptions, provided value ranges so wide they were meaningless, and structured his businesses in ways that made it nearly impossible to determine what he actually owned and what income he actually received. Ethics experts repeatedly flagged his disclosures as insufficient and potentially misleading, but Trump dismissed all criticism as political attacks and never provided the detailed information that would have allowed proper conflict of interest analysis. Even his handling of the mandatory IRS audit of presidential returns during his time in office followed this pattern. Federal law requires the IRS to audit the president's returns every year. It's supposed to be automatic and comprehensive. But according to whistleblowers who came forward in 2023, the IRS audit program for Trump essentially didn't function during his presidency. The audits were perfunctory, limited in scope, and according to some accounts, were specifically directed by Trump-appointed Treasury officials not to look at certain areas of Trump's finances. What should have been the most thorough audits in IRS history became rubber stamp exercises that didn't scrutinize Trump's returns in any meaningful way. Now, it looks like the comprehensive audit that should have happened during Trump's presidency is finally revealing what he spent years trying to hide. This pattern is becoming all too familiar. Trump obstructs financial transparency, fights disclosure requirements, and works systematically to prevent anyone from seeing his real financial condition. You can have legal authority to obtain records, legitimate oversight responsibilities, and clear statutory requirements. But Trump will fight every single request through every available legal avenue, using delay and obstruction as his primary strategy. The approach is never to address the substance of what the records might show. It's always to prevent the records from being seen at all. So, what exactly is in this IRS audit report that has Congress demanding answers and legal experts talking about potential criminal charges? Well, it all boils down to what investigators are describing as a deliberately concealed offshore financial network designed to hide assets and avoid both taxes and disclosure requirements. The situation developed because Trump apparently set up accounts in corporate entities in tax haven jurisdictions that he never disclosed on the required foreign bank account reports that all Americans must file if they have foreign accounts exceeding $10,000. Banks in the Cayman Islands received transfers from Trump-related entities. Corporate structures in the British Virgin Islands held assets that generated income. Swiss accounts received deposits that don't appear to have been reported as income on Trump's U.S. tax returns. Ultimately, what investigators documented is a pattern of money moving offshore, being held in accounts under corporate names rather than Trump's personal name, and generating income that doesn't appear to have been properly reported to the IRS. As investigators pieced this together, they decided to trace the money flows backward and forward to understand the full scope of the offshore network. They subpoenaed records from foreign banks, obtained corporate registration documents from tax haven jurisdictions, and compared all of these records against Trump's tax returns and financial disclosure forms. Their approach seemed to be building a comprehensive picture of the offshore structure so that Trump couldn't claim any particular account was an isolated situation or an innocent oversight. At first, when hints of this investigation started to leak in early 2024, some legal observers thought Trump might be able to argue that the accounts belonged to his businesses rather than to him personally, or that the income was properly reported through complicated corporate structures that made it hard to trace. Tax haven entities often involve layers of ownership that can make it genuinely difficult to determine who ultimately controls assets and receives income. But here's where things started to go wrong for any potential Trump defense. As the evidence accumulated, the connections between Trump and these offshore accounts became impossible to dismiss as coincidental or ambiguous. According to MSNBC's reporting on November 20th, based on sources who had seen the classified IRS report, investigators documented cases where Trump personally signed documents establishing accounts, where money flowed directly from Trump's known U.S. accounts to offshore accounts, and where income from offshore accounts funded Trump's personal spending in ways that clearly established his control and benefit. Some accounts showed Trump as the beneficial owner in corporate documents filed with foreign regulators. Transfer records showed millions of dollars moving offshore in years when Trump reported substantial losses on his U.S. tax returns. Income generated by offshore assets wasn't appearing anywhere on Trump's tax returns, even though the amounts were substantial enough that they should have been reportable. While Trump's accountants and lawyers were presumably helping structure these arrangements, predictably, Trump himself was deeply involved in key decisions about where to place money and how to characterize transactions. The evidence suggests this wasn't just some complex structure that Trump didn't understand. He knew exactly what he was doing. This was the moment Trump's defense team should have started to sweat more than a little. You see, tax evasion cases typically require proving willful intent, not just mistakes or confusion about complex regulations. Defendants can often claim they relied on professional advice, that they thought the structure was legal, or that any failures to disclose were inadvertent errors. But when you have documents showing someone personally establishing foreign accounts, personally authorizing transfers, and then not disclosing any of it on required forms over many years, intent becomes much easier to prove. And then, according to congressional sources, the IRS audit revealed something that made the situation even worse. For Trump, the audit found evidence that Trump had been specifically asked about foreign accounts on multiple occasions by his own accountants, and that he had apparently denied having any foreign accounts that needed to be disclosed. If true, that would transform this from potential negligence into active fraud, knowingly providing false information to tax preparers and to the IRS. Trump's historical position has always been that he follows his accountant's advice, and if anything is wrong with his returns, it's their fault, not his. He's tried to maintain deniability by claiming he signs what his professionals prepare. But if investigators have evidence that he lied to his own accountants about foreign accounts, that defense completely collapses. But then, when members of Congress got the classified briefing on the IRS findings, several emerged calling for immediate criminal referrals and expanded investigations. According to the New York Times reporting on November 21st, Representative Richard Neal, ranking member of the Ways and Means Committee, stated publicly that the evidence presented by IRS investigators raises serious questions about criminal tax evasion and willful failure to file required foreign account reports, and that this matter must be referred to the Department of Justice for criminal investigation. In congressional oversight terms, that's about as direct as it gets. A senior member of Congress with access to the classified evidence is publicly calling for criminal prosecution based on what the IRS documented. Now, this left Trump in an absolutely devastating position that he created entirely through his own actions. On one side, he needs to maintain his political narrative that his finances are nobody's business, that all investigations are politically motivated witch hunts, and that he's a victim of a corrupt system trying to take him down. His entire political brand depends on being the fighter who never backs down, never admits wrongdoing, and treats all legal challenges as illegitimate attacks to be resisted rather than legitimate oversight to be respected. On the flip side, he's now facing potential criminal charges for tax evasion and failure to report foreign accounts. That means he needs an actual legal defense based on evidence and law, not just political messaging and attacks on investigators. It means potentially having to explain under oath why he had offshore accounts, why he didn't disclose them, where the money came from, and what income they generated. His own signatures on documents, his own statements to accountants, and his own tax returns can all be used against him in a criminal prosecution. The tricky part is these two approaches are fundamentally incompatible. A viable legal defense might require acknowledging that he had foreign accounts, showing that there was some innocent explanation for not disclosing them, and demonstrating good faith even if mistakes were made. It might require cooperating with investigators, providing detailed information about the accounts, and showing remorse for any violations. But doing any of that would completely undermine his political message and make him look guilty to supporters who expect him to admit nothing and fight everything. So Trump is caught in a bind entirely of his own making. He can either maintain his defiant political posture, which means continuing to attack the IRS and Congress and refusing to provide any explanation for the offshore accounts, and that only makes prosecutors more convinced that he's hiding criminal conduct and makes any eventual jury more likely to see him as uncooperative and guilty. It strengthens the case that he knew what he was doing was wrong, or he can try to actually defend himself in the legal system, which means acknowledging the accounts, explaining them, and trying to show they weren't criminal. But that'll definitely require admitting things he spent years denying, and it'll make him look like exactly the kind of wealthy tax cheat he's accused his political opponents of being. It's a no-win situation, and it's entirely the result of Trump's decision to hide assets offshore while running for president, serving as president, and continuing to seek the presidency again. He apparently believed he could keep these accounts hidden forever, that his refusal to release tax returns would protect him, and that even if discovered, he could attack his way out of accountability. Now, those assumptions are being tested in the most serious possible way. This whole scenario is causing absolute chaos within Republican circles and Trump's campaign operation. If Trump has hidden offshore accounts that he failed to disclose while president, every Republican office holder is left wondering what this means for their association with him and whether defending him on this issue will destroy their own credibility. Those moderate Republican senators and representatives who are trying to balance support for the party with maintaining their own integrity are now worried sick about being asked to defend offshore tax evasion. When you're representing middle-class constituents who pay their taxes every year and struggle to get by, being asked to make excuses for a billionaire hiding money in the Cayman Islands is political poison. Meanwhile, the MAGA hardliners believe this is just more proof of the deep state targeting Trump and that he should refuse to cooperate with any investigation, attack the IRS as politically corrupt, and dare Congress to do anything about it. They see any financial scrutiny of Trump as illegitimate by definition, and they want him to fight without any acknowledgement that hiding offshore accounts might actually be wrong. Things became even more intense when international transparency organizations started weighing in on the significance of what the IRS audit revealed. According to reporting from CBS on November 21st, the Tax Justice Network, a respected international organization that tracks offshore tax evasion, issued a statement saying that the structure described in news reports about Trump's accounts bears the hallmarks of sophisticated tax evasion schemes that have been used by wealthy individuals to hide assets and avoid tax obligations in their home countries. The organization's director specifically noted that using multiple jurisdictions, the Cayman Islands for corporate structures, British Virgin Islands for additional layers of ownership, and Swiss banks for actual accounts is a classic pattern seen in deliberate tax evasion cases. It's not the kind of structure that happens by accident or through innocent business activities. It's designed specifically to obscure ownership and hide money from tax authorities. When international experts on tax evasion start describing Trump's offshore network as a classic pattern of deliberate tax avoidance, that's the moment to really pay attention. These are people who study this issue professionally, who have no stake in American partisan politics, and who are simply describing what the evidence suggests based on their expertise. Another development that made Trump's situation even worse came when former IRS Commissioner Charles Rettig, who had actually been appointed by Trump himself and served during Trump's presidency, was asked about the offshore account revelations. According to Politico's reporting on November 22nd, Rettig stated in an interview that failure to file required foreign account reports is taken very seriously by the IRS, and that in cases involving deliberate concealment and substantial unreported income, criminal prosecution is the standard response. This is significant because Rettig isn't some partisan Trump opponent. He's a Republican who Trump appointed. But as a former IRS commissioner, he understands tax law and knows that what's being described in the audit report is serious criminal conduct if the facts are as they appear. His willingness to publicly state that this type of conduct normally results in prosecution sends a powerful message that this isn't just political theater, it's legitimate law enforcement addressing serious violations. When Trump's own former IRS commissioner is publicly saying that cases like this typically result in criminal prosecution, you know the legal jeopardy is severe and real. So, let's break down what these hidden offshore accounts could mean, because it's not just a riveting financial scandal. It has serious consequences for Trump's legal exposure, his political viability, and the broader questions about whether wealthy, politically connected individuals can simply hide assets offshore with impunity. First up is the immediate criminal jeopardy. Trump is already facing multiple indictments for classified documents, election interference, and hush money payments. His legal expenses are astronomical, reportedly exceeding $50 million and climbing. His lawyers are stretched thin, managing cases in multiple jurisdictions. Now he's potentially facing criminal charges for tax evasion and failure to report foreign accounts. And honestly, that's not the best addition to an already overwhelming legal burden. Most Americans pay their taxes honestly and file the required forms. When they learn that a billionaire former president was hiding money offshore to avoid taxes, the reaction tends to be visceral anger rather than sympathy. This is the kind of conduct that unites people across the political spectrum in outrage, because everyone feels like they're playing by the rules while the wealthy and connected cheat. Democrats are definitely planning to hammer this issue relentlessly. They'll argue that Trump is the ultimate hypocrite, railing against globalists and elites while using their exact same tax evasion tactics. They'll point out that Trump claimed he couldn't release his tax returns because they were under audit, when the real reason was that they would have raised questions about offshore accounts he was hiding. They'll have the IRS audit report, congressional testimony, and expert analysis backing up their claims that this was deliberate tax evasion, not innocent mistakes. You can expect to see Trump's America First rhetoric played side by side with evidence of his offshore accounts in Democratic campaign ads from now until Election Day 2024. Every time Trump talks about bringing jobs back to America or keeping money in this country, Democrats will remind voters that he was stashing his own fortune overseas to avoid paying American taxes. Now, let's touch on what this means for Trump's relationship with his own party, and particularly with major Republican donors. The Republican Party has always positioned itself as the party of law and order, the party that demands personal responsibility and following the rules. But by continuing to support Trump while he faces credible evidence of tax evasion, Republicans are completely undermining that brand. Major Republican donors, many of whom are themselves wealthy business owners who follow tax laws and resent being painted as tax cheats by Democrats, are now faced with defending or at least tolerating a standard bearer who apparently hid offshore accounts to avoid taxes. This creates a serious tension. Do they continue supporting Trump and accept the damage to the party's credibility on tax issues? Or do they start looking for an alternative candidate who doesn't carry this kind of baggage? Several prominent Republican donors have already quietly expressed concerns to reporters that Trump's legal problems are becoming untenable and that the party needs to move on. The offshore account revelations are likely to accelerate that sentiment. When you're asking wealthy supporters to write large checks to support a candidate, and that candidate is facing criminal tax evasion charges, the optics are absolutely terrible. This situation shines a massive spotlight on wealth inequality and the two-tier justice system that many Americans believe exists. At the heart of the issue is whether a billionaire former president can hide money offshore while middle-class Americans pay their taxes honestly, and whether that billionaire will face the same consequences that an ordinary person would face for the same conduct. If an ordinary American failed to report foreign bank accounts and hid income from the IRS, they would face criminal charges, substantial fines, and likely prison time. The IRS prosecutes these cases regularly against middle-class and upper-middle-class individuals who get caught hiding money offshore. But when the defendant is politically powerful and has a devoted base of supporters, will the system actually hold them accountable? For 250 years in American democracy, we've aspired to equal justice under law, the principle that everyone plays by the same rules regardless of wealth or political status. But that principle has been severely tested in recent years, and the Trump era has tested it more than any other period in modern history. Trump has repeatedly demonstrated that if you have enough money for lawyers, enough political support, and enough willingness to attack the system, you can delay accountability almost indefinitely. But tax evasion through concealed offshore accounts is different from many of Trump's other legal troubles. The evidence is documentary. It's not about competing witness accounts or interpretation of ambiguous statements. It's about bank records, corporate documents, and financial forms. Either the accounts exist or they don't. Either Trump disclosed them or he didn't. Either income was reported or it wasn't. The factual questions are straightforward, which makes this case potentially much harder for Trump to muddy through his usual tactics. So, the implications of this case reach far beyond just Trump's personal legal jeopardy. It's about whether our tax system operates on honesty and transparency, or whether it's just a requirement for those who don't have the resources and connections to hide money offshore. Each time, wealthy individuals successfully avoid consequences for tax evasion, while ordinary Americans face prosecution for far lesser offenses, it undermines faith in the fairness of the system. Think about it. If Trump can hide hundreds of millions in offshore accounts, fail to disclose them for years, and then avoid serious consequences through political pressure and delay tactics, what message does that send to every American who honestly reports their income and pays their taxes? It tells them they're suckers for following rules that the powerful ignore with impunity. These revelations don't just affect Trump. They shape public perception of whether tax laws apply equally or whether they're just suggestions for the wealthy while being mandatory for everyone else. And that's incredibly dangerous for maintaining the voluntary compliance that our tax system depends on. If people believe the system is rigged and that only the little people pay taxes while the rich hide money offshore, compliance drops and the system breaks down. Democracy and fair taxation both rely on shared commitment to rules and transparency, assuming that everyone will deal honestly with government authorities and that violations will be punished regardless of who commits them. When those norms crumble, both systems start to falter. Looking ahead to the 2024 elections, it's clear that all of this is going to have devastating effects on Trump's campaign. We're less than a year out from the general election, but the narrative being set now around Trump as an offshore tax cheat is going to be nearly impossible to overcome. If the story dominating headlines is Trump hiding money in the Cayman Islands while attacking immigrants and claiming to be the champion of working-class Americans, that's catastrophic. Hypocrisy that will alienate exactly the voters Trump needs to win. Working-class voters in swing states, The people who believed Trump was fighting for them against the coastal elites are going to have a hard time reconciling that belief with evidence that Trump was using the same offshore tax dodges that he claimed to oppose. Voters usually don't reward hypocrisy, tax evasion, and financial dishonesty. They want leaders who practice what they preach, who follow the same rules everyone else follows, and who demonstrate basic integrity. Right now, with hidden offshore accounts and an IRS audit documenting his failures to disclose, Trump isn't offering any of those things. So expect Democrats to champion a message focused on fairness, honesty, and ensuring that wealthy individuals pay their fair share just like everyone else. After years of Trump claiming to be a champion of American workers while apparently hiding his fortune offshore to avoid American taxes, there are a lot of voters who believe that if you elect someone else, the tax system will actually be fair again. They're promising no more billionaires hiding money in tax havens, no more two-tier justice where the wealthy play by different rules, just equal treatment under law for everyone. That message might just hit home for a lot of voters, including working-class voters in swing states who previously supported Trump. So, here's the deal. An IRS audit just revealed that Donald Trump maintained hidden offshore accounts in multiple tax haven jurisdictions that he never disclosed on required federal forms while running for president, serving as president, and continuing to seek the presidency again. This isn't just about aggressive tax planning or using legal deductions. It's about systematically hiding accounts from federal authorities in apparent violation of laws that send ordinary Americans to prison when they get caught doing the same thing. If Trump successfully avoids meaningful consequences for this conduct, even just by delaying until he potentially regains power and can shut down investigations against himself, then we're basically saying disclosure requirements and tax laws don't matter for the politically powerful. That would mean we're stepping into a completely new realm, where wealth and political support place someone beyond the reach of financial regulations that apply to everyone else. It's about so much more than just Trump's offshore accounts. It's about whether we genuinely have equal justice under law, or if we've entered an era where the wealthy can hide assets offshore with impunity, as long as they have enough lawyers to fight and enough political support to claim persecution. It's about whether tax evasion laws apply to everyone or just to those without political power. So, keep an eye on this. Things are just heating up. Congress is demanding answers. The Department of Justice will face enormous pressure to investigate criminally, and Trump will face a choice between cooperating and providing explanations or continuing his strategy of total obstruction and attack. The next few months are going to be crucial. We're just getting started with understanding the full scope of Trump's offshore financial network and whether he'll finally face real accountability for hiding assets and income from American tax authorities. This ride is far from over. The stakes have never been higher, the documentary evidence stronger, and the political implications more profound. A former president caught hiding money offshore while attacking elites and claiming to fight for working Americans. Whatever happens next will shape not just Trump's future, but whether our tax system operates on equal enforcement or becomes a joke that only applies to those without power and connections.